and that you're living the life of happy health and prosperity. Most importantly, that you are doing good things. Right? That's what I hope. Yeah, I talked about things on this channel, and today I'm going to be going over what is happening with everybody's favorite orange coin, Bitcoin, and the crypto market, and markets in general, right? Especially I considering everything we went over yesterday. And if you were watching the live stream, what we went over about the cryptos. So, how do I put it nicely, right? We give people who watch our live streams, we give you probabilities to the upside and the downside, and even sideways, because that's all an asset can really do. It can go up, down, or sideways. So the question is, when you see probabilities to the upside, downside, and sideways, and you're told that there's a probability that a certain thing may or may not happen, does that fix a number in your head? That means, oh, well, 68.3% of the time, it's going to be closed within this range. Well, then I'm just going to go with that. Or do you just think to yourself, oh, there's at least 2/3 of a probability it's going to do that? Because the probabilities are outer limits, right, of what something is likely to do. They're targets, right, of what something is likely to do. Standard deviations of what something is likely to do. Standard deviation of what? Standard deviation of the mean of returns when it comes to trading, right? Because what is it deviating from? It's deviating from the mean, right? So if it's deviating from the mean, right, one standard deviation of the mean of returns, that's one, STDEV as they call it, that's your normal distribution of how things were to fall. If you were to take a bunch of marbles, in a bag or in a cup or whatever, and drop them on top of a kind of a cone shape or a hill shaped thing, right, and let them roll down to the floor and watch them distribute all over the floor, if the floor was evenly surfaced and not, and flat, not sloping down or up or something weird, so they could just land where it would land without artificial interference, the distribution of those marbles would be what's called the normal distribution. Okay? Yeah, it'd be scattered all over the room, right? It would have gotten there if you look at the bird's eye view of that room and see where all the lines went and followed the trajectories, even if they hit walls and bounced off and did all that, and you just do the physics and count the angles and see that when it hits the wall, it bounces 90 degrees or whatever, you would see that's a normal distribution, right? Pattern. Why? Because, right, that is what happens with data moving through normal distribution patterns, including in markets, right? Ask and bid prices move along according to normal distribution patterns. By the way, they also move along according to Laplace distribution patterns, which is why both of those are great models to use for trading, right? But my point of all this is that if you like Bitcoin at $103,000, boy, you're ever going to love it at 95, 96K. right where it is right now, right? In fact, if you don't love it at 95 and 96K, I got to ask you, why were you cheering it on at 103? If you did, what was the point of that? Right? Like, you should be anxiously awaiting, if anything, if you don't have a lot of Bitcoin and you want to get more Bitcoin, you should be anxiously waiting for it to drop down significantly in price action. Significantly. Why do I say that? Well, I say that because it is very much the case that what is this? It's very much the case that the normal distribution, right, is representative of the majority of the distributions you will find. That is why they are called the normal distributions. It's not by the way. Right? That's the way they are. That's why they're called the normal distribution. I found a little trove of some interesting, very interesting things here you can pick up in this random little treasure patch. Very interesting. I'm fascinated by this. Somebody made like a little treasure trove of very cute little treasures. And I am scavenging it. Why? I'll tell you why. Because I actually have a secondary and tertiary use to repurpose these treasures for. So, as I pick up these little delights, I already know what they're going for. Which I know sounds kooky, but whatever. What does that have to do with trading? Okay, good question. What does that have to do with trading? Like I said in the video, if you like Bitcoin at 103,000 or whatever it was at the high last week, you're absolutely going to love it when it's cheaper. And why shouldn't you? Why shouldn't you? Bitcoin at 103,000 is a lot more expensive than Bitcoin if it should drop back down to 90 or 80 or 70. Now you might think to yourself, oh, there's no chance it's going to drop back down to 90 or 80 or 70 ever again. Well, I would just point you to the last time that we had all-time highs. I'm talking about when we had a 7. And over the course of a couple of months, went from nearly 7 down to like, I don't know, 50, 40, something like that. 38 maybe. And then slowly climbed back up and got back up to that 69, almost 70 mark. And then in November of 2021, began falling and fell for the next year, basically. On the high time frames, obviously. If you look at it, how it moved. And in November 2022, a year later, which happened around the same time that there was that whole FTX collapse, it fell down to 15K. It stayed there for like a month and a half. And we go, oh, it's never going to go up again. let's say Bitcoin is dead, it's just going to stay down here in the 15K range and never move. Which, first of all, 15K Bitcoin is not cheap. Most people cannot buy a $15,000 thing. You may not believe that, but it's true. Most people don't have $500. Most families don't have $500 for an emergency in the United States, which is like the wealthiest nation on earth per capita, according to some metrics, even though we clearly know that's also not true. But even if you were to say, okay, take even the wealthiest nation on earth, the actual wealthiest nations on earth, where per capita they may have more than that. Most families on earth, on average, do not have $500 for an emergency. So if you think you're going to be buying $15,000 Bitcoins all day, well, they're not, right? They might buy some Satoshis here and there. That price is, way more worth it to them. But how worth it is it when it's already over 100K? And again, I'm not anti-Bitcoin at all. I love Bitcoin. I think it's great. I'm one of the first people that mined it, right? It's fantastic. But it has a huge share of problems. As you guys know, I don't like the fact that it's basically owned now entirely by whales who have, thousands of Bitcoin or more, hundreds of thousands of Bitcoin. I think it's very bad for Bitcoin. I think that's not in the interest of Bitcoin. It's not the ethos of Bitcoin. It's not what Bitcoin was designed to be. And people will say, well, it's a free market, blah, blah, blah. People can get whatever they want. It's not a free market. If you think it's a free market, I got a freaking beach to sell you in South Dakota. Let me give you my Bitcoin address, okay? Send me 10 Bitcoin. I will give you a mile-long beach in South Dakota. You ready? Deal? Message me. You'll be kidding me if you think it's a free market. If it's a free market, how come Michael Saylor can get loans of 0% interest and you can't? Why can he borrow billions of dollars from the bank and you can't? Because he has money and credit, as they call it? By definition, that's not a free market. The fact that there's a thing called credit and debit means it's regulated and it's not a free market. Free market would not have such a thing. There's no such thing as credit and debit in a real free market. And if there is credit and debit in a free market, it would be credit and debit regulated and granted by the giver of the credit and the taker of the debit. Mutually agreed. Not agreed by regulations made by a third party or a federal group or whatever. And I'm not against even having those federal things, but I am against having those federal things or national things, depending on what country you live in. Those national rules apply to a market that regulates capital allocation, and then you call it a free market. It's not a free market. It's by definition not a free market. You're saying we are making rules on the capital markets. Then it's not a free market. Doesn't matter what the rules are, right? Doesn't matter if they're entirely built to protect the interests of the consumers or the business owners or mutually beneficial to both. It doesn't matter. It doesn't matter if you've got the perfect rules. Capitalism is not about rules. Okay? It's about the free trade. And we don't have that. And I'm not suggesting even that we should have purely free trade where there are no regulations and you can have little child labor schemes happening or massive ones. You could be sending children down to coal mines or making, horrible devices because only their tiny little hands can do it and stuff like that, right? Those are obviously rules we want to have in place to regulate markets, right? We don't want to have forced child labor. We don't want to have working conditions for adults that are so bad that they can't, they're going to die on the job, right? In horrible conditions, right? We don't want that. But at the same time, you can't put rules in place to govern those things and still call yourself capitalism. It's not. Right? Expose capitalism for what it actually is. I don't mind. I'm not against capitalism, But in its purest form, yeah, there's some things about it that aren't great, like the fact that it does allow for horrible conditions, right, between the haves and the have-nots. Again, I'm not against capitalism. I'm for capitalism more than other systems, but it's not a perfect system. And at the same time, we don't have it. It doesn't exist. Okay, so to say, oh, capitalism is so bad, how would you know? You don't live in a world where capitalism exists, right? You're blaming social democratic systems, which is not the same thing as socialist systems. Social democratic systems are just a bigger social contract, which is just an unwritten agreement between people in order to foster better living among people. Because the more we are fostering agreeable things between each other, the better our general condition will usually be. That is why human beings are social creatures. Thermodynamics. Chemical engineering fundamentals. My goodness. What a book. What a book. Well. Physical equilibrium of design. Isn't that something else? Yep, that's something else, all right. I love finding old information that is still very current. Just seeing it as I walk by it. So, anyway, guys, look, what are the probabilities Bitcoin's going to go back up to 97 or 98 or 99 or 100 or 103 or 110 or 115? Probability is very good that it's going to go up over time at the moment. Doesn't mean it has to, no. Doesn't mean it has to go down to 70, 50, 40, no. Can it do either and even both of those things? Yeah. Is it likely to revisit some pretty low lows that are at the moment thought to be, we're never going back below those numbers again? Yeah, absolutely. I would say it's almost a guarantee that we will revisit price areas that people right now think, oh, it's never going to go back below that. It's almost a guarantee because we're already in the all-time high space. But remember, between 70 and 100, that's all blue sky. Like we've never been in that space before. Right? Like above 73 or whatever the high was in March. So between 73 or 74K and 103K, that's a good $30,000 range that Bitcoin had never been in before until November 6th of this year. Right? Once it started happening, we were in blue sky zone for like a good month and more, right? So bear in mind that all of the price action happening at the moment. And by the way, I do see you in the chat. Hello. All the price action happening at the moment, which is just following the returns, again, it's the first time it's really happening, right? In the monthly sense, right? We've never been up here before, right? This is all new. Since November of this year, this is all new. And November was last month. So, like I said, if you like Bitcoin at 103K, hello, sir. Hello, Vinesh. If you like Bitcoin at 103K, you're going to love it at 96K and lower because you can acquire more, obviously, for less, which is kind of the whole goal. Unless you're a masochist, in which case your purpose is to acquire less for more. I know there's people like that in the world because obviously most people are like that in the world. If there weren't people like that in the world, they wouldn't be using leverage. They wouldn't be trading ridiculous time frames with the same leverage, trying to swing trade volatile assets, right? Instead, they would be trading low time frame volatility, entropy, probabilities, and statistics, because that gives them the much better probability of being consistently profitable. So yeah, that's what's happening. I see your messages. All right, guys, I'm going to call it a video for now. And, again, notice where I told you guys the targets were yesterday during the live stream. If the dollar did, this or that, or if, stocks did this or that, or if crypto did this or that, the VRE targets were spot on again to the upside targets and the downside targets. They nailed them. Right? It's not an accident that we use VRE targets, Laplace targets, normal distribution targets. We use them because they work. If they didn't work, we wouldn't use them. Okay. Well, this isn't a chat about God or the Bible, but hey, feel free to share your feelings, man. Anyway, that's it, folks. Have a good one. Talk to you guys later. Cheers.